Good day, my dear students. My name is Dr. Ismaila Olotu Abdullahi. I am the lead lecturer for ACC111. That is a fundamental course that is taken in the Department of Accounting. The course title is ACC111. The course code is ACC111, and the course title is Introduction to Accounting 1. It's basically for undergraduates. It is a core course, and it's a three credit unit. There are a number of programs that actually take this course. We have BSc Accounting, BSc Business Administration, BSc Banking and Finance, BSc Public Administration, BSc Economics, B.Ed Economics Education. Considering the number of departments that actually take this course, the department has actually allocated the course to a number of lecturers. We are about 11 that are supposed to take this course. The names of the various lecturers are here. The first name there, that's my name. I'm the lead lecturer. We also have Dr. S.I. Yeri. We have Dr. M.U. Doshiro. We have Dr. Halima S. Abubakar. We have Dr. Hassan Musa. We have Dr. Usman Musa. We have Muhammad Nasser. We have M.I. Menoma and Dr. Usman Makama. We also have Umar Ibrahim Ohinohi, and then we have Liman Alaji Mohammed. For the purpose of visual communication, if at all we're going to do that, it should be sent to the lead lecturer's email, who will further communicate to the various course lecturers for responses. The lecture hours are supposed to be 3 because it is a 3 credit unit. That is expectation. The course overview is basically about the fact that the course is designed to introduce students to the basics or the fundamentals of accounting, i.e. the introductory aspect of accounting. At the end of this course, we expect that the students should be able to explain the nature and scope of accounting. We also expect that the students should be able to identify 4 roles played by accountants. In addition to that, we expect that the students should be able to identify at least 5 users of accounting information and their respective information needs. We also expect that at the end of this course, students should be able to apply double entry principle and record transactions into what we call the subsidiary books. At the end of the course, we also expect that each student should be able to prepare what we call a trial balance of a typical business organization. And then each student is supposed to be able to differentiate between capital expenditure and revenue expenditure. The contents of the course as follows. First, we'll be looking at the nature and scope of accounting, where we'll basically express what accounting is and also define what accounting is, see how it differs from bookkeeping, and then identify the various areas covered by accounting. We also expect to look at the roles of accountants. What are those roles that accountants play in any economy? And then we'll also be discussing accounting concepts and conventions. These are basically the principles that underline accounting recording and practice. In addition to that, we'll also be looking at users of accounting information. We'll look at methods of recording accounting data. We'll be looking at double entry principle or double entry bookkeeping. We'll also look at books of prime entry, or what we'll call the subsidiary books. We'll also be looking at the cash book. We'll post entries to the ledger. We'll extract trial balance, and we'll close our discussion for this course by the end of the semester by looking at capital expenditure and revenue expenditure. The assessment method is such that we'll have continuous assessment, which is 30%, and then the exams will cover 70%. That will give us a total 100%. For attendance and participation, attendance is compulsory, participation is mandatory for all students. We don't expect that the students should use phones while in the physical class. Of course, for the virtual class, you can access our interaction through your phones, but the emphasis here is that we are not allowed to use phones while in the physical class, because these are distractions to discussions in the class. For the key textbooks and probably references, these are the various texts that we expect that students can have access to and read. We have the one by ABWA, that's Association of Accountancy Bodies in West Africa. We have Robert Igben on financial accounting made simple. We have financial accounting and reporting by Stoloway, Lebers and Ding. And then we have modern financial accounting, which is IFRS adopted approach by Zubeiru AD. Of course, we expect that you can also make use of any accounting textbook or financial accounting textbook for the purpose of this discussion. Having introduced the course, we will be looking at in detail each component of the course. Today, our interaction will be on first, the nature and definitions of accounting. We'll also look at the scope of accounting and the various roles accountants play in any economy. And that will be taken by me, Ismaila Olotu Abdullahi. Kindly follow me so that I can take you through the slides to explain these items that we have just mentioned. Accounting started because people needed to record transactions. They needed to know how financially successful they are. And of course, they also need to know how much they own. By extension, they would also like to know how much they owe other individuals or business organizations. Because of that, accounting is about the provision of financial data or financial information to people about their resources. Accounting is concerned basically with accountability, i.e. accounting is about accountability. The underlying purpose of accounting is to provide financial information about an economic entity. In simple terms, the main purpose of accounting is to make financial information available to various users. Of course, this information has to do with business entities. The information that is so provided normally is done periodically to shareholders and other persons that are connected to the organization to enable them decide the extent to which they want to continue to associate with that organization. The need for accounting is more pronounced in a business where a lot of finance, a lot of risk, a lot of energy is actually involved. By way of definition, we'll look at a number of definitions put forward. The first one is to look at the definition given by the American Accounting Association, AAA. They define accounting to mean the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of accounting information. We can also see accounting as an information system in which economic transactions of an entity are recorded, classified, summarized, and analyzed and communicated to assist the process of decision making. You can see that even from the definition, we are clearly acknowledging the fact that accounting is about providing financial information to assist in decision making. Now, one definition that has enjoyed a greater acceptability in the area of defining accounting is the one put forward by the American Institute of Certified Public Accountants way back in 1961. By their definition, they see accounting as an art of recording, classifying, and summarizing in a significant manner, and in terms of money, transactions and events which are in part at least of financial character, and interpreting the results thereof. Now, it is important that we take each of these processes that are involved. First is the issue of recording. Secondly is the issue of classifying. Third is the issue of summarizing. Next is the issue of interpreting. In fact, these are very important accounting processes that we need to explain so that we can appreciate the nature and, of course, the task of that is ahead of accounting. The art of recording involves putting into writing or in print the transactions of financial character. By financial character, we mean that this transaction can be expressed in money or money's worth. And they are mostly done reasonably soon after they occur, i.e., as soon as the transaction takes place, it is important that the recording process commence, and it is normally maintained by the company. For instance, Such transactions can be recorded in the day books, in the journals, in the books of original entries, in the cash book, as the case may be. The second process that is identified in the definition given by the AICPA is that of classifying. The art of classifying is concerned with the systematic analysis of the recorded data so that items of like nature are classified under appropriate heads. For instance, you are likely to find yourself in a business organization as an accountant where transactions are carried out on credit, while other transactions are also carried out on cash basis. So it is important that as part of classifying process, the transactions that are carried out on credits are classified under credit transactions, while the ones that are carried out on the cash are also classified under cash transactions. Again, it is part of classification to say that, look, if you have daily transactions that have to do with probably sales, it is important that you classify and group sales into one under one heading. This accounting classification is usually done by maintaining ledgers. It is easier for you to capture that by the time you have ledgers with individual accounts head under which all financial transactions of similar nature are collected. I gave an example of sales. If you have daily sales, you can easily capture that under an account or a ledger account, which is referred to as a sales account, as the case may be. Then the issue of summarizing. The art of summarizing in a significant manner consists of presenting the classified data in a manner which is useful to the internal and external end users of accounting statements. Recall, we said earlier on that the nature of accounting is basically to provide financial information to various users to help them take a decision. Now, how do we provide this information? We don't just provide the volume of the information that we have. We normally summarize them and then make them available to both internal and external users of these statements. Some of the key summaries that we normally prepare and make available to these internal and external users include what we call the statement of comprehensive income. Formerly, it was known as a profit and loss account, and then the statement of financial position, formerly known as balance sheet. These are simple examples of the summarized version of the information that are normally provided to users, both internal and external users, for their use. And then lastly is the component of interpretation of the summarized data in such a manner that the end user, sorry, this is supposed to be the end user can make meaningful judgments about the financial condition or the profitability of the business operations, or can use the data in preparing future plans and laying down policies to execute such plans. It is important that the accountant provide an interpretation of this summarized data. This is one area that an accountant is far ahead of a bookkeeper. A bookkeeper will stop at the summary aspects that we mentioned, but an accountant goes beyond the summary to interpretation. And these are some of the reasons why the definition given by the AICPA is more elaborate and has captured key accounting processes or functions that are required in defining what accounting is. Now, the next thing is for us to look at bookkeeping. There are situations where you hear people saying, is it bookkeeping? Is it accounting? Is it bookkeeping and accounting? One is a subset of the other. Bookkeeping is a subset of accounting. Accounting goes beyond bookkeeping. But let us look at what bookkeeping is. Bookkeeping is simply the systematic recording of the amounts, dates, and source of each financial transaction. It is concerned with the systems that enable the financial information to be extracted from business transactions of an organization. In other words, bookkeeping is the recording phase of accounting. It is the classification and recording of business transactions in books of account. The recording of transaction is normally a routine task, meaning it is something that is done on a daily basis. Therefore, it tends to be repetitive. You find yourself recording this transaction on a daily basis, and it tends to be repetitive. Now, having defined what accounting is, having identified what bookkeeping is, it is important that we look at the scope of accounting. Accounting covers a number of subject areas. The first one is financial accounting. It is a branch of accounting that is concerned with classifying, measuring, recording of business transactions, and reporting the results and financial position of a business concern. In simple terms, this is the aspect of accounting that borders on preparing financial information available, especially for external users. In fact, the introduction to accounting that we are going to look at in this semester and probably second semester will focus more on financial accounting than any other aspect of accounting. For cost accounting, which is also a field of accounting, is that field that covers the process of identifying, computing, analyzing, interpreting, and reporting cost management for planning, control, and decision making. The emphasis here is on identifying cost, computing cost, analyzing cost, interpreting, and reporting cost to guide management in planning, control, and decision making. The other extension to cost accounting is management accounting. It is an area of accounting that borders on the process of generating relevant, sufficient, and reliable information, both quantitative and qualitative, to management for the purpose of effective decision making. You can see that the emphasis here is on the fact that it borders on both quantitative, i.e. information that can be expressed in numbers, and qualitative, i.e. information that may not necessarily be expressed in numbers, to management, and it will help them take a number of decisions. As we progress in the field of accounting, probably in your 200 or 300 level, as the case may be, you are going to come across these other areas of accounting. Auditing is also a field of accounting. In simple terms, it is an independent examination of the financial records and procedures of a business entity by a qualified accountant, an expression of opinion as to whether or not such financial statements show true and fair view of the business entity. Again, the emphasis here are in two folds. Number one, the independent examination, and number two, that examination has to be carried out by a qualified accountant who is expected to express his opinion, his or her opinion, as to whether the financial statement prepared by a business concern show the true and fair view of the activities of that business entity. The other area accounting covers is taxation. Taxation is a field of study that is concerned with the various processes that are involved in administration and collection of taxes. You should know that tax is a compulsory levy that is normally imposed by the government on income of eligible persons. Here, eligible persons include individuals, partnership businesses, companies, and the rest of that. And the purpose for imposing this tax is to provide infrastructure, provide security, etc. to the populace, i.e. The citizens of a particular country. Then we have government accounting as also a field of accounting that is concerned with recording, analyzing, classifying, summarizing, and communicating public sector entity financial and economic events to management and senior executives of such public sector organizations to enable them plan, organize, and control the activities or operations of that public sector entity. Number two, to external users for statutory, regulatory, oversight, and investment purposes, among others. Then the other area is oil and gas accounting. This, otherwise referred to as petroleum accounting, is a field of accounting that covers activities in the oil and gas industry, and it involves two major areas, namely the upstream operations, where emphasis is on exploration and production of hydrocarbon deposits, and number two, downstream operations, which involve storage and transportation of hydrocarbon, refining and hydroprocessing, as well as marketing and distribution of petroleum products and its derivatives. We have a number of companies that are engaged in upstream operations, and we also have a number of companies that operate within the downstream operations. The other field of accounting is environmental accounting. This is an emerging area. It is an area in accounting that borders on providing information on ecological impacts of an entity's production activities on the environment. In fact, it is encouraged in recent times that companies should be able to disclose the impacts of their activities on the environment. Then we have forensic accounting. It is an aspect of accounting that covers the science of gathering and presenting financial information in a form that will be acceptable by a court of competent jurisdiction against those who engage in any kind of economic crimes. This is an area of accounting that has enjoyed recent attention, particularly where you have cases of fraud and economic crimes committed either in the private sector or the public sector. Now, these are the various areas that accounting covers. As we progress in due course, some of these areas are dealt with extensively at different levels before you graduate in accounting. Now, what are the roles played by accountants? As an accountant, you play very important roles in all spheres of life. This is more pronounced in areas involving the use of economic resources, meaning where you have utilization of economic resources, the attention of accountant is definitely required. And because of that, where there are challenges with economic or financial base, the accountant certainly has key roles to play. These few words of Professor B.C. Osisioma capture the roles of an accountant when it comes to any economy. He said, like the creative artist, the accountant creates new business units. We call this incorporation. Like the midwife, the accountant delivers businesses of their babies. We call these babies subsidiaries. Like the doctor, the accountant nurses businesses back to health and administers curative medicine. We call this reconstruction, recapitalization, and amalgamation. And like an undertaker, when the situation so dictates, the accountant helps bury and inter dead and unproductive businesses. We call this liquidation and winding up. So you can see that from birth to death and even burial, the accountant, in the life of a business, not that of a human being, the accountant has very important roles to play. Now, as professionals, especially in private practice, what are those roles that accountants are expected to play? Number one, they provide auditing services. Here, they examine the books and records of the company, obtain reliable, relevant, and sufficient audit evidence, and then issue a report on the true and fair view of financial statements. The report issued by the auditor enables users to rely on the financial statements. In fact, it is a mandatory requirement that companies, particularly companies, should be able to ensure that their books are actually audited by qualified accountants who are expected to give a report to the shareholders, on the basis for which users will place heavy reliance on the financial reports prepared by such a business organization. Number two, as professionals, they provide tax services. In this case, they engage in tax planning for a company or an individual with a view to minimizing the person's tax liability. Their services are also engaged by the government in the investigation of the adequacy of tax paid by companies and individuals. So tax services, both on the side of private individual as well as government accountants, provide these services, and it forms part of the roles of accountants. Accountants also engage in provision of what we call management advisory services. Firms normally rely on the extensive knowledge of accountants to provide a range of management consulting services. They will render advice in the area of mergers and acquisition. Merger is the situation where two or more businesses come together and become one. Acquisition is a situation where a particular company buys, in quote, or acquire another company. So accountants normally provide advisory services in the area of mergers and acquisition. Whether an organization should enter a new line of business or divest. By divesting, we mean disposing of your investment in a particular company so that you can focus your funds somewhere else. So accountants provide advisory services in the area where businesses are interested in opening up or expanding or divesting from other businesses. They could also offer advice on asset replacement policy, the best computer-based accounting system to adopt. They could also provide advisory services in terms of setting up and operating the accounting system of any organization. In addition to the roles that we have mentioned, accountants also engage in what we call insolvency services. They could act as a receiver manager in the process of winding up of a company. In simple time, if a company is closing shop, meaning ceasing to exist, the services of accountants are normally expected so that they can close the books of the company and bury that company, as the case may be. The next one is investigation services. Here, the emphasis is on where there is fraud. So accountants can actually investigate fraud or any other matter for which investigation services are required. These are basically roles that accountants play, especially as professionals. Now, as employees of an organization, accountants have a number of roles to play. Number one, they compile and analyze financial information to prepare entries to accounts, such as general ledger accounts, and document business transactions. They prepare profit and loss as well as cost accounting reports. They establish and maintain and coordinate the implementation of accounting control procedures. They also monitor and review accounting and related system reports for accuracy and completeness. They prepare and review budget, revenue, expenses, payroll entries, invoices, and other accounting documents. These fall within the purview of the responsibilities of accountants, or the roles accountants play within an organization as employees. They also analyze revenue and expenditure trends and recommend appropriate budget levels. They ensure expenditure control, i.e., ensure that expenditure doesn't go beyond what is budgeted for. Of course, they will rely on budget which are normally prepared by them. If what is budgeted for is far lesser than what is being incurred in actual sense, they conduct what we call analysis so that at least the reasons or justification for why the actual results are beyond what has been budgeted for explored, so that that can be mitigated in subsequent periods. They explain billing, invoices, and accounting policies to staff, vendors, and clients. If there are discrepancies in accounting issues, accountants are expected to resolve such discrepancies. For instance, if there is discrepancies between the cash balance in the cash book and the bank balance in the bank, it is expected that an accountant is to prepare what we call a bank reconciliation statement. They recommend develop and maintain financial databases, computer software systems, and manual filing system, particularly with respect to accounting system. They supervise the input and handling of financial data and report for the company's automated financial system. They interact with internal and external auditors in completing their audits. Remember, we said auditing has to do with examination of the various records of a business concern to confirm its true and fair view or otherwise. If there are other responsibilities that are assigned by the management of the organization to the accountant, it's expected that accountants will also key in. But these are some of the roles that accountants play as employees of any organization. Thank you very much. We have come to the end of this discussion. In our next discussion, we'll be looking at accounting concept and convention, where the emphasis will be on issues that have to do with the principles that govern accounting practices, how they record, what explanation do they have for recording what kind of transaction. The principles supporting that will be extensively discussed in our next class. Thank you so much for listening. If there are questions, we expect that such questions will be made available, and then we'll respond to them almost immediately. Thank you very much.